Health insurance questions answered right here today. Stay tuned. Hey guys, I'm Nicholas Schrouder. Right up in that other box is Justin Schrouder. We are the Schrouder Brothers, Berkshire Hathaway Results Realty. Today we are joined with Kai Morris, my bad. Also known as Kai, the insurance guy. Love the tagline. We are huge on taglines. Kai is a insurance broker. So Kai, thank you for being with us today. I appreciate it.
Man, thank you for having me.
So I did a little research on you and love your business Facebook page. Love your videos. We're huge on videos. They're awesome, and I see you do a lot of them. So perfect. Obviously, with a lot of eyes on social right now, it's really really cool.
Yeah.
But you want to go ahead and explain kind of what you do, what you cover, kind of thing, and then
absolutely, man. So I am an insurance broker. We deal with health insurance. We also deal with life insurance and supplemental coverage, etc. I'm with a company called Health Markets Insurance Agency. We've branded ourselves for years now as just the Kai, the insurance guy. So that's my entire team. So the Kai, the insurance guy team. Being brokers, we represent all the carriers in the state. So if they're here, 99% chance I have a contract with them. So there's no bias. I'm not working for any one particular company. So we're able to kind of help out pretty well that way. Service a ton of, you guys with, realtors and et cetera. So have built a pretty big brand in that community as well. So that's what we do. That's kind of all of it in a nutshell really quick.
Okay, awesome. Well, the first one I want to touch on, which is really, really funny.
Yeah.
Because I think you just finished up a video on it or just posted a video on it
okay.
a few minutes ago. Those people that are out of work right now or have lost their jobs because of the virus.
Yeah.
How does that affect everybody? What's their move? How's it work?
Cool, man. So right now, obviously with everything going on, a lot of people are being let go. So what happens when that happens, Nick and Justin, is that how the company works is that they're going to, if they had benefits through the company by law, they're going to legally be obligated to cover them until the end of that month that they let them go. So obviously if that happened, sometime this month, they're going to have coverage till the end of March. Okay. Then what will happen is insurers or companies are going to offer through the state, they're required to offer the employees that they're letting go something called COBRA. So now how that works is you'll often hear people say, they offered me COBRA. COBRA is actually, you can keep the same exact plan that you had through your job and you can roll that out and take it for a certain amount of months after you leave that employer, but it's normally really expensive. So with COBRA, you're going to absorb the cost that the employer was paying. So by law in the state of Florida, you have to pay 50% of your employees' health coverage. So whatever a person's paying, they can expect at least an additional 50% that they would have to pay to keep that policy because they're going to have to pay the entire policy at that point.
Gotcha.
And normally that's going to be really, really high. Sometimes it lands up, there's case by case where it lands up, working out and making sense. But normally that lands up being really, really high. So the option right after that is going to be something called a special enrollment period. So because of these things going on, there's something happening where we're going to have a special enrollment period. So whenever you lose coverage through an employer, they're going to give you a time frame where you can go ahead and get your health insurance through the state exchange. It has like 30 different names to confuse the American people, I promise. But, the healthcare.gov, Obamacare, the exchange, it's all the same exact thing. They just give it different names. Okay. So you'll have a special enrollment period to go ahead and pick a plan that way. And then those plans are going to be based on your projected income for this year. Now, if you're let go and you really are kind of in limbo or collecting unemployment, your income, you're probably going to get a good amount of help. And then we can make that plan a really affordable option as well. So you might be able to get what we call a subsidy and get your health insurance established. The way that'll work is it'll be effective the first of that month. So if we do it, today, it's going to be effective April 1st. April 1st, it's going to be effective May 1st. So, but no matter what, there's never a lapse in coverage. And then the third option, Nick, would be going on to a private plan completely. So there's sometimes where people will find themselves in situations where their income is still really high. to get help or something like that. And then they're trying to figure out a third option, if you would. And then that's what that's going to be. So they'll have a completely private option, and United Healthcare has some options, stuff like that.
Okay.
Yeah.
Awesome. I have a quick question on that, Kai.
Yeah.
So let's say, my employer lays me off and, like you said, I have coverage till the end of the month.
Yep.
And say I'm not supposed to open, or my employer doesn't open back up until mid-May. So I figure I can either do one of these options until I get hired back on. But this is where my question comes in. So say it's May 15th and okay, I'm back at my old job. Do I have to wait that, whether it's 90 days or whatever that trial period is, whenever you first start a job?
Okay.
Do I have to wait that period like all over again?
That's a really good question, man. And that is actually, to be completely transparent with you, that is something we are working through right now with a lot of our group carriers to figure out how they are going to handle that, because even for them, this is a first. So we actually had a call even with like United Healthcare, and it's like, you have an option to either terminate them in a sense while they're collecting unemployment. And then when they come back on, from what I've gathered so far, and we're staying on top of it, is that they would have to wait the 90-day period in order to get benefits again. And then we would have to just keep them on whatever option that we kept them on until those benefits kick back in. Okay. So that is they're approaching it right now. Still, they would not go without coverage, but there's some other things kind of in play, and I don't want to go too far down a rabbit hole, but there's these, some bills in play where you can, they're going to be reimbursing payroll so that you don't technically have to let people go, and so that benefits can continue. So there's some moving pieces right now, and we're trying to hope, we're hoping by the end of the week, we're going to get some clarity on that.
I feel like we're grilling you. We just met you and we're grilling you right now.
Oh, let's go, man. It's a hot topic, and so it's all good.
All right, let's shift from the virus stuff and go a little more general here. Cheers to the energy drink, by the way.
Let's go, man. Yes.
All right, on a basic side, in a normal world, like I said, I'm very, very green when it comes to health insurance. Pretty much my entire life, my mom's been like, "Why don't you have it? Why don't you have it?" I think for a very, very short period in time, I had it, and then I was like, whatever. So, aside the point. How about self-employed? Being as though we are self-employed. How does that work as a generalization?
So there, once again, it kind of comes down to two options. So if you're self-employed, and obviously dealing with a ton of realtors and a ton of individuals who are self-employed, a lot of times, so because that income-driven option is still available for you. Now, just to kind of put a little disclaimer, and this helps a lot of my self-employed clients, what they're looking for on the marketplace is the amount of money you are going to pay taxes on. Such a big key, because often, you'll have guys that make 200, 300 grand a year, but they only pay taxes on, whatever number, and it might be completely different. And the business need a certain amount of money, S corps, all that type of stuff. So you could still qualify for a subsidy. It just depends on how you are set up tax wise and et cetera. So the marketplace is an option. Now for the marketplace, if it's like a month like now where it's March, if you didn't have a special enrollment period, we would technically need to wait until the open enrollment timeframe. Probably heard those words before. Right. So that, November to December time, and then you could get a marketplace plan. Now, a good amount of my self-employed people, though, land up going private. So a lot of carriers, like United Healthcare is probably one of the most popular ones. They came back to the state to kind of combat that, because they knew there was a lot of individuals that weren't getting help on the marketplace. So quick disclaimer, if you don't get help on the marketplace, Nick and Justin, it's extremely expensive.
Okay.
So if you don't get any subsidy to make that premium lower, the prices doesn't even make sense. So this private side lands up being really incredible. So they don't base it on your income at all. They just ask you basic stuff. They're asking your age, and your zip code. And then, there's a couple medical questions that they ask, and then you can do a plan like that. And it normally lands up being about 60% less than what the marketplace would be unsubsidized. It's actually it's a plan I have myself, and it works really good. So those are some of the options as well for individuals that maybe they're kind of worried about that income thing, because it's like, I don't know how to project my income. I'm a realtor. I sell houses.
Amen.
So at the end of the month could throw everything off, or at the end of the year, now you're like, oh shoot, my income's 50 grand higher. So that's kind of one of those things where we land up going private. That way you don't have to worry about projecting your income. And that's one of the big options.
Well, that kind of answered actually one of my next questions, was kind of like process to qualify, but you said it's pretty much just more of a questionnaire than anything else with some of those.
Really simple. Yeah. So there's two plans that United has. There's a 3-year plan and a 1-year plan. The 3-year is a little bit more in depth with the medical history. The 1 year, it's really simple, man. They're looking to see if there's anything chronic going on. Because if there is, then of course they are going to want to say, hey, go over to the marketplace because they're going to cover everything, no questions asked. But if you're relatively healthy, and I use that word pretty loosely, just relatively, basic stuff is not a big concern, but relatively healthy, nothing chronic, that United option lands up being really, really solid.
Nice.
Yeah.
You say chronic, and I automatically think about Dr. Dre and Snoop Dogg back in 1992.
That's what I'm talking about, Justin. I like you,
man. Again, like I said, well, actually, this kind of fits in here. As far as like out of pocket, like initial upfront, how does that work? Again, like I said, I know I'm as green as can be on this stuff.
Yeah. So most of the so healthcare.gov, stuff like that is not going to have any type of like application fees or anything like that. United Healthcare, the biggest application fee they have is a $40 application fee. So if you were to do a plan like mid-year, the most you would pay is $40, and that's on their longest plan option. That's if you did the 3-year plan option. If you were to do like one of the 1-year plans, like most of them actually don't have an app fee now, and then it's effective next day. So you're approved that night and it's effective next day. And then like, if you mean out of pocket in terms of like plan structure, the cool thing about the private side is you can pretty much a la carte it if you would. You can say, hey, Kai, I want $1,000 deductible. And they'll tell you what that'll cost you. And you can raise that all the way up to $12,500. And that'll of course dictate premium and etc. So
awesome. I mean,
that
kind of answered my next question within there. Actually, I was going to say pretty much how long until you get covered, but you answered that right there. So boom.
There you
go.
Cool. Yep.
Awesome. Justin, you know a little more about this because you've worked on the non-self-employed side at one point in time in a previous life.
Yeah.
Any other questions, Justin? Just answer it.
I know you'd mentioned life insurance as well, so yeah. I got one for you. Whole or term?
It's like when you put someone in a corner, man. That's the tough one. So I have this conversation every day. I think it's really it's having the conversation to see what your needs are. I always think a term policy makes sense just because of how much coverage you can get for the price point. So if I'm talking to a young dad that has 2 kids and a wife and a mortgage, to get $2 million of whole life insurance is going to be really expensive. So a term policy, I mean, if I can write him a term policy for $50 a month and that covers the needs for the next 30 years, most likely his kids are out of the super dependent stage. They're 40 now, right? And so it's like, all right, they don't need $2 million from dad. The mortgage is paid off. We're grown, etc. But if something happens and their kids are 10, they're in trouble. So I think a term is always like my baseline. And then I always do have that conversation about whole life, if it fits, if it's something that we want to look at forever, etc.
Going like he's got Dave Ramsey's stamp of approval.
Dave likes me a lot, but I was going to reference it, but I didn't want to say his name, man. I was going to say Dave swears by term, right?
Oh, yes, he does.
Man.
All right, actually, I got a question from the other side of the room. My fiance, she's listening behind the screen, and she said, "Ask about the life insurance health exam."
Yeah. So, cool. Yeah, we do a lot of these every week. So with life insurance, typically, the traditional way is that there's going to be some sort of paramed. So they'll send someone out, and they want to, actually prick you and do this whole 9. But a lot of times now, and I would even say this pretty confidently, about 70% of my clients don't have to go through that. So they have something called Right Fit and Express Underwriting now for a lot of carriers. Most of the big carriers have it now. Your New York Lifes, your Mass Mutuals, all those types of people. So what they'll do, Nick, Justin, and fiance back there, or wife back there, sorry, they are going to just do a phone call. So what'll happen is I'll do the initial questions and I'll look, and as long as, once again, kind of like we were talking about earlier with Justin, like if it, chronic, if there's nothing that big going on, they'll say, okay, this person should be eligible for just a phone call. They'll just do a phone call, and I normally can get up to $3 million approved with just a call. So it's a 15-minute call. They do that. As long as everything is answered, cool. They're going to pull something called your MIB, Nick, which is it's like your credit report for medical stuff. So they'll pull that. As long as that comes back pretty clean, they'll go ahead and issue that policy in a day. We'll have life insurance binded in a day, and we can do up to $3 million in coverage normally. the traditional route, if they do find something, let's say that's like, you know, there's a strong family history of something, or you have a few things going on, we can still get it approved 90% of the time. But what they're going to do, they are going to send a nurse out. They pay for it. You don't pay for nothing, you know, and they'll come to your office, house, wherever. And, you know, it takes about 15 minutes, and they'll do your height and weight, verify everything, and then give you approval. Yeah.
Awesome. Well, yeah. I believe you know your industry pretty well. It's pretty impressive.
Thank you.
Justin, do you have any other questions or what?
No, I
No
really
more
enjoyed
tough
this. Yeah, sorry, man. I just my significant other's having to deal with some insurance stuff right now because of this coronavirus. So a lot of the questions I have are just from overhearing what she's having to deal with right now as well. So
No, I understand.
It just makes me sound smarter.
No, I got you, man. Absolutely.
Well, Kai, how can people get in touch with you?
Absolutely, man. So my personal cell phone number is actually 407-451-8756. My email is probably the simplest email in the world. It's just kai@kaitheinsuranceguy.com.
I love it.
So you can't forget that one. Message me, man, on any social platform. You know, we're on everything. Facebook's always super easy. And that's really it, man. You can call me directly, text me, however. So
that's awesome. And like I said, guys, I scrolled through his Facebook, and the videos are awesome, and I love them. Like, I love the informal vibes. Like, that's kind of how we try and do things as well.
Yeah.
But like they're entertaining and informative at the same time, which is what matters now, especially right now.
I think content is king right now. Like, you have to, you have to put stuff out, but you also have to know your industry and be an expert.
Agreed.
So, yeah, man, I appreciate that a lot. Thank you, guys.
Absolutely. All right, guys, I will put the Kai's information down in the description with links to his social as well. So definitely reach out to him for your health and life insurance needs. The guy knows what he's talking about. Again, thank you, Kai. I appreciate it.
My pleasure, Nick. My pleasure,
We will talk soon.
All right, guys. Y'all have an amazing day. Stay safe and sanitized, right?
Absolutely. Wash your hands.
All right, guys. Bye.
All right. Bye.